Hey guys, welcome to another episode with me, Shashank Udupa. And in today's episode, I'm going to talk about what you guys all wanted to learn, which is how the rich actually save taxes and how they actually ensure being rich. Now, when we talk about becoming wealthy or becoming rich, we always understand ki haan bhai, go and start earning a lot of money and you'll become very rich or you'll become very wealthy. But if you don't understand how taxes work, even though you work hard and you get a lot of money, you will lose most of that money into taxes. Now, we will understand how the rich people avoid taxes. Actually, they don't even avoid taxes. The rich people have smart ways to reduce their tax liability, and then they make more money out of it depending on how their cash flows and how their investments go through. So in today's episode we will understand what are the different types of taxes, and if you are an individual who's a salaried person, if you are a business owner, if you are a freelancer, this is a good episode for you because I'm going to teach you how to actually save as much tax as possible, and I'm going to tell you how other big people are doing their taxes as well. So we're going to look at all of this in today's episode. Stay tuned. Now, first things first, let's understand why do we pay taxes. Now, I know all of us hate paying taxes. We don't want to pay taxes. But why is it important for us to pay taxes? We pay taxes because the government gets a lot of money into their kitty so that they don't have to borrow from other countries and their current deficit goes up. So they don't have to keep borrowing from other people. And if they don't borrow from other people, our country's infrastructure can go up and we become a self-sustained nation. And usually, countries that have farming background are usually self-sustained countries, right? Now, the problem is there's another thing to way, the other way to think about it is a lot of people say ki boss Dubai jaisa kar do, right? Let's just make taxes completely gone and only we'll keep GST, right? Is that a good argument? I want to ask you guys, is that a good argument that we do it like Dubai where there's no income taxes and only when you buy something or you purchase something you have GST involved, which is fine. Now, if you look at what's happened in Dubai, right? Even though there's no income tax, the normal price of goods are very expensive. The cost of living there is very expensive. Why? Because everyone has extra money in their bank account, and because of that, the demand for a particular product goes up, whereas the supply remains the same. Now, even though GST is levied on all of that, the price of one particular product, even like water, will be very expensive there because there's too many people who want to buy it. Now, you'll be like, yeah, that's okay because they're buying it, it's up to them, right? They should not just spend, they should start saving more. Agreed. But do you know that in India, a lot of people are there below the poverty line? Now, if you remove taxes completely in India, then the rich don't get affected either way, but the poor start getting affected a lot because the same bottle of water for him now will become extremely, extremely expensive, which he cannot afford, right? So that is why we need to see how Indian taxes are so complicated, and there's a reason why it's so complicated. That's why they prefer taxing the rich and not taxing the poor because the poor, in fact, always get affected. Now, let me tell you one very interesting stat, okay? Now, in 2020, 2021, the total number of taxpayers in India was approximately 8 crore people. So, 8 crore people filed their taxes in 2020, 2021. Do you know what the population was of India at that point? 136 crores, right? So, out of 136 crores, only 8 crore people actually paid taxes, which is slightly sad. You know why? Because a lot of people don't even file their returns because they don't know how to file the returns and they feel, you know what, I'm just not going to file the returns. It's completely all right. Now, if you know that at the peak income tax rate, now we always think that our income tax rate is around 30%. It is not 30%, right? Every time you become richer, right? If you reach 50 lakhs, okay, there's a surcharge. If you reach 1 crore, there is an extra tax expense that you have to pay. If you reach 5 crore income, you have to pay more tax. So in fact, the more rich you become, the more money goes back into taxes, right? So we will look at how smart people are trying to do this in a very beautiful way. Now, at the peak rate, India's super rich will be taxed at 42.7%, not 30, not 33, it's 42.7%. That means almost 40% of your income, almost half of your income is gone in taxes, right? Now, that's very difficult, very, very, very difficult to actually manage because you need to grow your lifestyle, you need to grow your investments, but most of it goes into taxes. So let's look at how to understand how taxes work. And if you understand how taxes work, the flow of money, you'll ensure you save a lot of taxes. So let's directly get into this understanding bit, okay? Now, look at this first. I've just made a difference of all the different types of income that you can make or all the different type of people that are there. And after this, I will actually go to the income tax website and calculate the taxes as well. So I'm going to show you both. Massive knowledge packed episode. So click on that like button and subscribe if you haven't. Now, if you're a salaried individual, boss, you are at the worst performing category right now. Why are you at the worst performing category? Because number one, your tax get deducted at source, which is called TDS, tax deducted at source. So that goes away instantly, number one. Number two, first you're paying taxes, then you're doing your expenses. right? If you're an individual, first they cut away my taxes, then if I want to go buy an AC, I go buy an AC, right? So all the purchases that I do as an individual is taxed before, so I'm doing purchases after paying tax. Now that's a big disadvantage, and you go up to 30-40% if you're in the salaried bracket. So if you're in the salaried bracket, you're in a big problem. But I'll tell you how we can solve this after we understand all the different schemes. Then you could talk about rental housing, right? You get a house and give it for rent. That's a lucrative business. Everyone thinks that we will put all the houses on rent. Now, when you put houses on rent, 30% of that is deduction, 70% of that rental income is taken into your income tax directly, right? And here you also have deductions like municipal tax costs, and I'll show you all of that in more detail. Any expenses that you incur, your home loans that you pay will also be deducted from this income as well. So, but it still goes into your income tax, and income tax, personal income tax is the highest paid right now. Then we come to businesses. Now, why a lot of people start businesses? Because 25% is the tax that you pay in businesses, with surcharge and all goes up to 26-27%. Now, here you are taxed after your expenses, right? Not before. You are taxed after your expenses. So, if a salaried person is earning 1 lakh, 30% goes away, then he gets 70,000 in his bank account. Whereas in businesses, you get 1 lakh, you do 30,000, 40,000, 50,000 worth of expenses, and the remaining amount, which is 50,000, is only taxed. So obviously, whoever is doing a business is obviously at a greater advantage, because if you want to fill your fuel, you do it from the business. So a guy filling his car or a guy filling his bike, if he's doing it from the business account, then he's getting the tax benefit. Why? Because income minus expense, after that tax. Whereas if you're a salaried person, you've already paid your tax, and then you're paying the petrol bill after your tax. So you're already in a disadvantage over there. Now comes freelancers. Now, a lot of freelancers don't know this, but all your freelancer income under Section 44 ADA, you have to pay literally half your tax, right? Half your tax, as in you still pay 30% tax, but you pay it only on half your amount up to 50 lakhs. So, for example, let me explain. If you are making, say, 40 lakhs of income you have made as a freelancer, right? The government says straight away that under Section 44 ADA, 50% of that revenue we will consider as expense. So, you only show the remaining 50%. So if I'm a freelancer and I've made 50 lakhs, let's say 50 lakhs in revenue, then I have to pay tax only on 25 lakhs. So I'm literally 25 lakhs, I have to pay whatever 30% or whatever that percentage is at that point. I'm only paying half. So under Section 44 ADA. So now if you're a freelancer, you're not even a business. If you're a freelancer, you're again at an advantage, right? Because you're paying 15% tax effectively at the end of the day. Coming to the stock market. Stock market, there are two taxes, right? Again, super advantage. Long-term capital gains, if you hold it for more than 1 year, is around 10%. And short-term capital gains, if you hold it for less than 1 year, is around 15%. Again, far cheaper than all your other things. So people who are day in, day out operating in the stock market, obviously the risk level is very high. But all the people who are operating in the stock market are obviously at an advantage from a salaried individual, because he's paying a lot of money in tax. Again, here, if you breach your barriers and go above 50 lakhs and 1 crore and all that, you have to pay surcharge, which is the same in both. Understood? And finally, the most beautiful thing about taxes, right, is agricultural income. Now, if your agricultural income is there, right, I'm not talking about non-agricultural income. If you're doing dairy farming and all, that comes under non-agriculture. I'm talking about pure agriculture farming. If you do that, your tax is 0% and at no cap, right? You make 1 crore, you make 5 crores, you make 10 crores, there is no cap. And I'm going to show you all of this with an example, right? Now, this is super advantageous. Now, think about this. I know obviously agricultural farming has its own benefits and has its own negatives as well, right? But if you can do it really well, say for example, you take crops like say coconut trees, where you don't have too much maintenance. First 3 years or first 4 years, you have to wait. Once the coconut trees are grown, your maintenance of that is very less, and then your output from that will start getting you a lot of income, and that is tax-free income with zero tax. Just understand the beauty of that game. Right? Now, let's look at how you can win this system before I go into the explanation, okay? If you're a salaried individual, what do? First, I'll come to salary, then I'll talk about freelancer. Now, if you're a salaried individual boss, you are already playing a disadvantage game, right? Why? Because you're already paying 30% tax upfront or whatever your percentage bracket, you have no option. Now, what you should do, flow of money is very important. Now, if you're a person who is in the salaried department, would you take the money that you get after tax, right, your savings, and would you put the savings in rental housing, or would you put the savings in the stock market, or would you put the savings into agricultural department? There are three options you can do, right? Now, if you do housing, what happens? You come into an EMI trap. You have to start taking EMI. Now, obviously, EMI is tax deductible, but you come into the EMI burden. Now, if you take that EMI burden and then give it off again for rent, and then that again starts impacting your tax benefits, again, you're in a problem there. what a lot of people do, the salaried people, they start investing in the stock market. So then they invest in the stock market. Why? For a long period of time. So long period of time when they invest in the stock market, you get whatever returns, again 10% goes from there. But the smartest thing to do, which is something that I'm doing next year, right, is whatever money that I'm saving right now, instead of buying a house or instead of buying putting more money into the stock market, I already have a lot of money in the stock market, but this is very low, so I'm okay. I'm long-term capital gains player, right? I'm going to invest in an agricultural land, right? Why? Because you get a lot of perks, right? You get a lot of perks and the income is zero. Now, when the income tax is zero over here, right? And after 3 to 4 to 5 years only, you will start making money. You will not make money. In fact, first 3 years, you will lose money in agricultural land. But after 5 years, so the next 25 years, you will make a lot of money. Now, what will I do with that free cash flow? Two options. That free tax exempt loan, free tax exempt cash that I get, one, I will put it back into the stock market, number one, and make good money out of that. Two, I will increase and buy more property in the agriculture space, thus increasing my free income tax free cash flow, which is 0%. Now, this is debated, right? A lot of people are like, boss, you need to start taxing agricultural income because there are people making crores and crores of amount of money and not paying tax. And this is a beautiful legal situation in our country which people are taking advantage of, and it is completely all right to take advantage of this. In fact, you're boosting the economy, so that is why they're giving you tax free, right? And they can't charge a lot of tax because the lower income group starts getting affected, so they can only charge people above 1 crore. So this, understand this game very beautifully, okay? So if you just look at the flow of money, here you are in a disadvantaged position, here you will be in an advantageous position, right? Now coming to business and freelancer. Now here there is another game that a lot of people are playing. Let me tell you the beautiful game here, right? Assume you are a freelancer, okay? Freelancer as in I am doing websites for people, I am doing designs for people, I have my own portfolio, I am helping people with branding. I am a freelancer, I'm doing my own property, right? And I also have a team. I have 4 or 5 people that I'm taking care of. Now, under section 44 ADA, whatever income I make up to 50 lakhs can be deducted by 50%, and I only pay tax on the rest. But let's see how you can save this even more. Okay, first go establish a business, right? You and somebody go establish a business because you have a team right now. Now, when you establish a business, whatever revenue you get, let's say you get 50 lakhs of revenue, which was the same revenue you were getting here, right? If you're getting 50 lakhs of revenue, here you are paying tax on 25 lakhs, which is your taxable income, right? Now, what happens here is if you get 50 lakhs of revenue, remove all your team expenses first. Let's assume your team expense is 10 lakhs. Okay. So finally, you will be left with what? 40 lakhs of revenue over here. Now, with the 40 lakhs of revenue, you should also take salary, obviously, because you're an employee. But wait, if you take salary, won't you come into this bracket and you'll pay 30% tax, which is again wrong? You can't do that, right? So what do smart people do? They take salary from their own company as a freelancer. Now, what happens when you take salary from your own company as a freelancer? What happens? You pay only half the tax again. So now what happens with the 40%, 40 lakhs that you have, you take money as a freelancer again, this becomes an expense. Assume you take 10 lakhs salary. Now your taxable income from the business becomes 30 lakhs at 25%, right? This is at 25% of 30 lakhs. And now you take money as a freelancer of 10 lakhs, out of which only 5 lakhs is taxable at this point. Now, out of 5 lakhs, your tax is barely anything, right? Barely anything. So this is something that a lot of people are doing here. In fact, your effective tax rate now, instead of paying tax on 25% and your 25 lakhs of total amount, you're now paying 30 lakhs on the tax on 30 lakhs and you're only paying 25% on this. So this is the beauty. Now you have to adjust, right? You have to see, can I make expenses more than 50%? If you can make expenses more than 50%, then this would be a better option for you to do. But if you can't do that and you say, no, my expenses cannot go more than 20%, my expenses only 10%, then there's no point you be here. So if you're a freelancer making up to 50 lakhs, this is great. But what if you're a freelancer making 1 crore in a year? Then you don't get this benefit. So then if you're making 1 crore in a year, you better set up a business. You make 1 crore here, right? Take almost 50 lakhs as salary for yourself. And then you again split that 50 lakhs into 25 lakhs. And then you pay on tax only on 25 lakhs. So this is what smart people are doing right now. Now let's understand this more in actual reality. Let me go to the income tax calculator website. Now, this is the incometaxindia.gov.in income tax calculator website. Let me show you the beauty of this. I want you, all of you, to go here and just play around with it. Okay. So assessment here, let's say 20, 21, 22. Okay. I am an individual. So let's do an individual. Are you opting for that new tax schedule? No, I don't want the new tax regime. I'm going with the old one. I am a male individual and I am a resident right now. Now look at this. it says income from salary after standard deduction of 50,000. So when you're in the income class here, your maximum deduction that you can get is 2,50,000, 2,25,000, up to 2,50,000 you can get. How does this work? 1.5 lakh is ATC, okay, and approximately 50,000 is standard deduction that you see right now, standard deduction, and the remaining 25,000 is your medical insurance. When you take medical insurance, the government wants you to take it. It's a tax deduction. Now, if you take it for your parents who are old, you can go up to 50,000 over here. So totally 2.25 lakhs you can save when you're a salaried person, right? Now, coming back here, let's say assume my income from salary is say 15 lakhs a year, okay? Let's assume it's 15 lakhs a year. Now, with an income of 15 lakhs a year, my taxable income is obviously 15 lakhs, right? Look at this. My total tax liability at this point is 2.62 lakhs right now. So 2.62 is my total tax liability. Now, obviously there are different levels of tax breakups. Please read about it. But your total taxable income right now is 2,62,000. On top of that, you have health and education cess of 10,500. Your total tax liability is 2,73,000. Now, how do we reduce this, right? Now, before getting into reduction and all that, let's look at other stuff. Now, what if you have an income from house, right? House property here. Now, let me show you the details here so you can understand more clearly, right? Now, income from self-occupied house property or income paid on this one, right? So I'm going income from let out property. Let's assume I have bought a property and I've given it for rent. Now, here what will happen? Let's say I'm getting 5 lakhs of rent right now, okay, on a yearly basis. Now, out of 5 lakhs of rent, 30% they will remove, okay? 70% ke amount pay, which is 3,50,000, I have to pay tax again. Okay, so that will be added to my 15 lakhs, which is now 15 becomes 18.5, and now my tax liability goes up to 3.67. Understood? Now here, what are the deductions you can get? The deductions you can get here are the interest that you're paying. Assume I'm paying 10,000 rupees interest a month, or maybe a little more. Let's say 1.5 lakhs of interest in a year I'm paying, right? So if I do 1.5 lakhs interest in a year, it calculates here as well. Actually, that's here, not there. One sec. You have to put it here. Right? So you come down, obviously it deducts it for you. So that is great. If you have interest, you can get deduction, but you still pay proper 2 lakhs pay tax, and you come here, it's come back to the same amount. So this is one problem that you can see, right? Now, let me remove this for now. Look at capital gains. Capital gains is very similar. Let me show you how this is. You have short-term capital gains and you have long-term capital gains. Again, you can put this 10 to 15% income, right? Income from other sources, if you want to disclose whatever interest, commission, winnings from crossword puzzles, lottery system, you have to put it here as well. Now, coming to agricultural income, right? Now, look at this. I'm going to put an amount of, now currently, let's look at our total tax liability right now, right? It's 15 now, okay? Everything else is 0. Let me change this to 0 as well, so that everything is 0 right now. Cool? Awesome. So, with 15 lakhs is taxable income. Now, let me go to agricultural income and put 25 lakhs. Does it change anything? Something changed. Look at this, right? So, if I remove this, it comes down. If I add this, it goes back up, right? Now let me do 1 crore. 1, 2, 3, 4, 5, 6, 7. I'll tell you what this is. Now on 1 crore income, right? You are getting a tax of 3.75 lakhs. In fact, without the 1 crore, what was it? Without the 1 crore, it was 2.62. So actually 1 lakh is being increased right now, right? Only 1 lakh is being increased if I actually put agricultural income of 1 crore. Why is that? Because agriculture income is not taxed. Agriculture income is still 0. But whenever you have an income, a total income of more than 50 lakhs, there's a surcharge of 10% that gets added to your thing. Now that 10% is also, again, there's different schemes. Right? Above 1 crore, it's a different situation. Less than 1 crore is different. So on 50 lakhs, it's say 1 crore. On 50 lakhs, it's again 10% surcharge. So that gets added to your entire capital right now. But again, just look at the beauty of this, because 1 crore of income and I'm paying 1 lakh extra tax is literally 1% of my total gains that I'm getting from agriculture income. So I'm actually paying only 1% tax in effect. Now, if this was 0, right? Let's say my total income was 0. I'm not making any money from salary. I'm only an agricultural farmer making 1 crore revenue. What is my tax liability? 0. Literally 0. That's only that you only have to pay that extra surcharge if you're getting tax from salary. If I don't get tax from salary and I say I only have agriculture income and maybe I have some stock market income of long-term capital gains of say 5 lakhs for that year only, right? This is how your entire tax liability would look. 13,000 rupees. So this is something that a lot of people are exploiting. So when I talk about this entire situation, right, when you're talking about salaried and rental housing, you're already playing at a disadvantage. When you're talking about a business freelancer, there's a lot of ways you can show expenses here and move it around and reduce your tax liability. But this is the best thing. Now, Obviously it is not easy to set up an agricultural land, but a lot of people who are doing it, who are taking the time out and spending money on that, they're getting full cash free. Now what they do, when the money comes in, imagine I make 1 crore on agricultural income, what I do is I take that 1 crore and reinvest it in the next land that I have, which is right next to me. I'll start buying more and more and more land. Now what happens is, every year if I start reinvesting the profits into buying new lands and reinvesting the profit to growing more crops, and I get a massive amassed piece of land, and I'm paying zero tax for the next 20 to 25 years, will you become rich or not? Tell me this. That's all I'm going to ask you. Now, guys, sorry, this was a slightly lengthy video, but I needed for you to understand how taxes work, right? You need to understand the flow of money with respect to taxes, and how people making the same amount of money can obviously enjoy some benefits and not enjoy some benefits, right? You need to show a lot of things and you need to be smart about this. So I've just broken down the entire taxation scheme for you. And now, if you are in the agricultural income or the stock market income, you're already an advantage over most of the Indians that are there in the country. Now, currently, agricultural income above 1 crore does not have any tax, but I've heard that there's a lot of debate, and the new panel is being discussing this, that they will start taxing people in the agriculture department above 1 crore. Now what that effective tax rate, it can't be too much, because it will still affect the farmers, so I'm assuming it's not going to be too much, but let's see, let's discuss after that. But for now, just think about it, right? Keep buying land, keep reinvesting that money. It's not easy. I'm not saying there's no risk. There's 100% risk. You might, one year you might have no income at all, but assume that is that loss that you face with the agriculture income, assume that is the same amount of tax you might have paid, right? And then do good also with the money that you save with the tax. Don't be greedy and just keep reinvesting like a lot of people do. Please be smart and also do that, right? And some rich people, what they do is they also have trusts, right? Charitable trusts, and they also have NGOs where they invest all their money into that NGO, and they take a salary from that NGO, but the remaining amount they actually do good to the people, which also gives them goodwill, and the goodwill obviously comes back because people start now buying your main products because of the goodwill that you have. So this is how a lot of people in the Indian taxation system do really well. And I just want to come and quickly tell you how the entire thing works. Okay, so I hope you like this video. It was quite detailed. If you have any questions, put in the comments below. I'll answer them as well. And this is me, Shashank Udupa, signing off. I'll see you guys soon. Take care. Bye.